KFin came out with the numbers a while back. Revenue growth of 1.3% on a year-on-year basis. EBITDA margins have been steady at about 46%. And profits have gone up by nearly 22% on a year-on-year basis. We have Mr. Sreekanth Nadella, the CEO of the company with us. Mr. Nadella, what's happened has happened, right? A revenue growth of 1.5%, stable margins. What can you guide for the first two quarters of FY24? Because we have seen volatility in the capital markets pick up. The IPO market too has slowed down.
Very good afternoon, Rima. Thanks for having me over. We have ended the year on a satisfactory note per our estimates at the beginning of the year. Overall revenue for the full year has grown 13%. The PAT has grown by nearly 32%. The PAT margin stood at 27%. Last quarter of the fiscal, of course, as we all know, had been a very volatile period. Mark to market has come down. The new fund offerings have dried down too. In spite and despite of that, we have seen a growth of over a percentage in the case of top line, and PAT margin continuing to expand along with the EBITDA margins through that period. We are looking into this year on a far more optimistic note. April, if anything, is an indicator to go by. We believe that we should be able to see a turnaround in the capital markets. And KFin's revenue from the non-mutual fund business has grown from 26 to 29%. Now, that is a business that is not entirely tied to the capital markets of the country. And we believe that it has been providing us a very solid hedge and will continue to do so in the coming year.
Okay, so when you're talking about the different segments that are doing well for you and FY24 looks optimistic, give us a sense of what growth will look like in FY24 and what is the margin picture, because you did tell us earlier that you'll be able to maintain 40 to 45% EBITDA margin subject to market conditions. What's the outlook now?
Thank you. As I've called out, we ended the year on a 41.5%. The quarter per se was at 46%. On an ongoing run rate, we are confident to maintain the guidance that we had given earlier on. In terms of the revenue growth itself, we are looking at mid-teens in terms of the revenue growth that we would expect this year. Revenue contribution from other lines of businesses, from our registry business or international businesses, and the alternatives and the pensions, they have been growing up north of 35%. And that trajectory will continue into this year. And with any luck with mutual fund business growing, we believe that we'll be able to probably clock lower high teens as well.
Mid-teens revenue growth and margins between 40 to 45% is what you're expecting for FY24. What about your market share? The last known market share in the equity market segment had increased for you to levels of 35%. What is it currently and what are you aiming at in FY24?
So our market share had steadily been growing over the last 4 years. It has improved from 29% to 35% plus this year. And even if we see just this particular year, our market share, both on the overall AUM as well as on equity, had been on the upswing. We have also have some, big launches. Bajaj Finserv is due to launch the operations into the coming few months. And I'd like to believe that will help us with the overall market share, in addition to our clients growing much faster than the overall industry rate. It would be hard for me to predicate market share expansion, but I'd like to believe that anywhere around 50 basis points is a possibility into this year.
50 basis points from current 35% is what you mean?
That is correct.
Okay, all right. You were also looking at some acquisitions. Is anything finalized there? What kind of cash or kitty have you put forth in order to look at this inorganic growth?
We have recently concluded, in fact, one acquisition, 100% buyout of a technology platform, solution provider, largely leveraging artificial intelligence and UI UX for mobility and SMAC combinations. That acquisition was concluded in the month of April. It's a 100% buyout called Mobile Technologies. We have also invested 26% stake in an account aggregator, One Money, and we have applied for necessary approvals from the regulator to acquire majority stake up to 76%. So acquisition strategy continues to be something that we're extremely confident of. The previous year acquisition of Hexagram, which is the premier fund administration platform in the country, has been fully integrated, had already seen 35% plus revenue growth in the preceding 12 months. In terms of cash and equivalents, we are sitting on about 330 crores of cash, and any acquisition can be managed and funded through the internal cash flows.
Can you tell us about some new mandates that you have won recently in the last 2 months or so? And have you lost any mandates to your competitors?
Certainly, Rima. We have won the mandate of one of the new mutual funds, Old Bridge, in the preceding quarter.
This happened in the prior quarter, right?
That's happened.
Old Bridge,
After that,
yes.
After that, there have been no new launches. So to that extent, no new mandate was awarded to anybody in the industry. On the alternatives side, we have clocked 146 plus schemes spread over 64 asset managers in the preceding 12 months. That marks a near doubling of the total alternative space that we have. National pension system, we have expanded our market share from 5.6 to 7.3%, which clocked a growth of 28% versus industry growth of 13.6%. And similarly, in the case of corporate registry, we have met the important milestone of crossing 100 crore turnover this year, which marks a 35% plus growth over the full year compared to the previous year.
Okay. And can you tell us about the addition that you've seen to your international portfolio? Have you been adding a lot of international clients? And what's the traction that you are seeing on that front?
On the international side, post acquisition of Hexagram, we have integrated 12 new clients into the overall ecosystem of KFintech clientele, mostly in Malaysia and in Philippines. In terms of the organic growth of transfer agency work in Southeast Asia is concerned, 2 of the clients have gone live, but the mark-to-market in that part of the world had been subdued, which had impacted slightly on the assets under management, which again, I'd like to believe will go into this year. There is a very heady pipeline into the coming 12 months in terms of the growth prospects in the Southeast Asian business. We have also signed certain alternative investment funds in Canada and few in Singapore in the previous quarter as well.
Okay, all right. So while you are looking at planned additions in the global and international business, while these 2 segments are a smaller part of the overall pie, global business services saw a decline YOY and quarter on quarter, while international and other investor solutions business saw a good growth. Can you tell us what's happening? What went wrong in the global business services business?
Certainly. Global Business Services is a isolated business where we manage the mortgage book for a large American player. That stands aside as a different line of business compared to all of the KFin businesses which are more associated with the asset management space. Given the mortgage situation in the Americas hadn't been, very, heartwarming over the last 2 quarters, we all know the stress that had been there because of the increase in the interest rates in the US, which have adversely impacted the book of business when it comes to the mortgage management. There had been a slight quarter-on-quarter decrease, though there had been a 5% increase year-on-year, even on the case of the DBS business.
Okay. All right, Mr. Nadella, it was a pleasure speaking with you. Thank you so much for joining us and giving us details as to what happened in FY23. More importantly, what's the outlook for FY24? That's the word coming in from KFin Technologies, reacting on numbers that the company reported just a while back.